These are in listen-only mode.
Good evening, everybody. Good evening, everybody. I still see a lot of names still coming in here. So I'm gonna slowly just kind of start nice and slow here, so people can get in here. Um, kind of the last even. Yeah. Good evening. Good evening, guys. I see a lot of names I'm familiar with, and a lot that I'm not. So welcome, everybody. If you've ever seen me speak, or if you, or maybe a lot of you are members of mine, you pretty well know how how I present and what I bring to the table. And you notice this chart here is substantially different than you see every day in the trading room, and in most presentations that I do. So today's going to be on Fibonacci's. So we don't need all the moving averages and any indicators that we use. We're going to be concentrating solely on moving averages today. So I can go ahead and get rid of all them indicators. Good evening, guys. Good evening. Can you guys all hear me just fine here? Dave, can you hear me now? Anybody else having issues? Everybody hear me all right? I'm getting a lot of yeses. It's fine. It's fine. Dave says we're good to go now. All right. Very cool. Very cool. All right. Good evening, guys. Good evening to you, Robert. Good to see you guys here. I see a lot of trading room members here, so this is really good. I'm glad you guys are here. All right. Sound is good. Very cool. See a lot of faces that I've exchanged emails with, so that's nice too. Good evening to all you guys. Hopefully, we can come up with some pretty good stuff here tonight. As I just said, basically this evening is going to be based solely on Fibonacci's. I'm going to do a little kind of an overview to get warmed up here. Just talk about this market today. It really tanked, guys. I know in the trading room I was kind of indecisive, kind of flipping a coin, seeing if the market was going to follow that Russell down, and sure enough, it did in the afternoon. As you guys seen today, definitely had that tank in the afternoon. You see this big old drop to the downside this afternoon, so that was very interesting to see. Um, right whenever we closed the trading room, we got this big floodgate opened up back to the downside. So we closed lower, and at this point right now, we are still maintaining down at these lows. Now the S&P is substantially different than something like a Russell or a Nasdaq, being that the S&P and the Dow are holding a little bit stronger. As you see here, you see these lows over the last 5 days. We're simply just testing them here on the S&P. This is the last 5 days lows on the S&P, and we're just simply testing them. And, the Russell is substantially weaker and actually pulling these markets down. So Robert thinks we're working on the next leg down. We very well could be. I'm not sold on it yet, but I definitely think we definitely can be. So definitely look out. But that's for another issue. We'll talk about that tomorrow, Robert, in the live trading room. We're going to slowly start getting going here with our Fibonacci lesson. It's going to be pretty standard, guys, to begin with. We're going to just basically talk about what my Fibonacci levels are, how I set them up, and then we'll go into a little bit deeper, a little bit deeper into the Fibonacci series, talking about all the way from how to draw them properly, which seems pretty simple, be it sometimes that's not all that simple, and then what levels to use, what Fibonacci extensions are. Now, I'm going to use two different terms of extensions, one being like for a profit target, and the other being maybe this thing had too big of a run. Like these runs this afternoon, this big old drop rather than a methodical move. Maybe the market had a big drop and you need to use a Fibonacci extension series rather than your standard retracement. But we'll talk about all that. A big part of tonight, we're going to talk about how to find targets with fibs. If you've seen me before, you might have seen me talk about this, but I'm going to really hit on that. And then, obviously how to draw them. And then to wrap it up, guys, before we do question and answer, kind of got a little treat for you. Something that if you've only been a part of my trading room for, the last few weeks or a couple weeks, we haven't been doing a lot of, but I have not forgotten about it, and I'm going to bring it up tonight. One of my all-time favorite trading strategies has to do with Fibonacci's, has to do with using multiple time frames of Fibonacci's, and I really think you're going to want to stick around and see that. We're going to do it about towards the end of this. maybe in a half hour. I predict this going anywhere from 30 to 45 minutes, and then some Q&A at the end. But nonetheless, it's going to be a really good strategy here that you guys could literally take tomorrow and start to implement if you like to trade the S&P. I really don't recommend it on any other market except for the S&P, and I'll explain why. It has a lot to do with the amount of volume that the S&P brings to the market versus some of the other ones like crude, Nasdaq, and maybe the Russell. They don't quite bring as much volume to the market, so the strategy doesn't quite work as well. It's based on a lot of backfilling. So nonetheless, we'll bring that up here towards the end, but let's go ahead and get started here, guys. Like I said, we're going to start off with the absolute basics, and we're going to work our way up pretty much all evening. So we're going to start with the extreme basics and work our way up. How many of you actually use Fibonacci in your trading? Can I just get maybe a couple yeses or nos or starting to, or do you guys use a lot of Fibonacci's, or is that why you're here? You're trying to maybe pick up another tip for trading. I'm already getting quite a few Fibonacci traders. So, all right, and a little bit of just getting started. Here to begin. Okay, all right. So, we kind of got a mixed bag of nuts. We got a lot of experienced Fib traders, and it sounds like a lot of you actually are kind of just getting started. So this is going to help. I'm going to start off with the basics and then work our way up here. So. All right, guys, it's about 5 or 6 after, so I'm going to go ahead and get started. And like I said, we're going to start with the basics here. Let me just get a little bit of space. I got a chart over here that's no indicator, so I'm just going to give myself some room here. And we're going to start off with basically, what price levels I use, and then we're going to go into how to actually implement them into the into our setup. So all you need to do is go ahead and get your basic Fibonacci tool. Thinkorswim offers them right here, one click away, so that's real nice. And your default's going to be substantially different than what mine is. As you can see here, what we're looking at here with mine, we're looking at several different lines. So the 100, the 78, the 61, the 50, the 38%, and then the 0, that's the highs. So you got the highs and the lows. And then you have your targets. You have your targets up above. Your minus 23% and your minus 61.8% extensions. So that's part of the extensions, and we'll talk about both the extensions that I use moving forward whenever we start to dig a little bit deeper into this. But bottom line, what are all these indicators? If you look, if you break down, whenever you go into your properties, whenever you get started and you don't have them set up quite yet, guys, like I said, I'm going from the basics on. Go ahead and go in here, edit your properties, get your 38%, get your 50%, get your 61.8% pullbacks. Them are the main ones that you want to deal with. The 50, the 38%, and the 61.8. 38, 50, and then your 61.8% retracements. Those are going to be our buying and selling levels, so they're very important. If you would like to leave out the 78%, you can. I will not go over it tonight. It's for a different topic of mine. The 100, you're more than welcome to leave out because that is basically where your start point is. And the 0 you can leave out because that's basically where your end point is. But if you'd like to leave them in there, you can. And then I highly recommend the minus 23% and the minus 61.8%. Now those are going to be your extensions and your targets. The reason you put a minus is because it adds them on as an extension. So those are the basics. Those are the price levels that we're looking for. As far as getting started and how to draw them, we're going to go over that here in just 1 second, bud. So yes, if you do not have this set up, guys, this is the absolute basic. You have no need to put in the additions. A lot of people use like the 23%. A lot of them use the 86%. I am breaking this down so much easier than that. I really don't need that. What I'm looking at is a simple, just a simple push-up. So in this situation here, this would be if the market came down, made a low here. We drew from the low, pushed up to the high. And what we're looking for is just a retracement. We're looking for a retracement in the continuation of somewhat of a trend. So basically, we're looking for buy zones and targets by using these Fibonacci's. So to break it down as simple as we can get, that's about what we're doing. So for you guys looking to get started with fibs, I know some of you that are more advanced, this is extreme basics to you. We're going to get very advanced here in a little bit. But for right now, that's what Fibonacci's are. We're looking to draw from the market low, the most recent swing low in the market, to the most recent swing high in the market. And we're looking for this ratio, this 38% to 61.8%, as a pullback area to buy this market and trade it back to the upside, having targets up above. Does that make sense, guys? That makes sense? So to break it down, them are all the levels that you need, just the 38 to 61% pullback, and then your extensions. Let's go ahead and move forward here, guys. I am recording this. Yes, I am recording this, so you can go ahead back and you can edit yours, and play it as slow, pause it, and play it as slow as you would like. So, yeah, to answer your question, guys, I've had a couple of you go ahead and ask. This will be recorded, so no worries there. This will be recorded, and I will present it and send it out to all of you that are in here, and then. Obviously I'm going to put it on the website and I'll show you all that here in a little bit as well. What Fibonacci levels to use, we just went over that, bud. Like I said, you just came in here, go back and check that out. Go ahead and when not to use Fibonacci's, we're going to go over all that here in just a little bit as well. So let me go ahead and start to present here and show you how I draw Fibonacci's and what the best way for us to go ahead and draw them and then when not to draw them. So moving forward here, where to find targets is going to be the next thing we go over. We covered this in the trading room just last week, so a lot of you have this little demonstration that I'm getting ready to pull up for you, but this is just as important as learning how to draw them. Let me drag this over here, guys. As I said, we have 3 different areas that we're looking for this market to pull back to. We're looking for the 38%, we're looking for the 50% pullback, and we're looking for the 618% pullbacks. Now, what does this mean and where can we find targets? All right, let me break this drawing down. What this means here is the market's pushing higher, we're pushing higher, and on the pullback, it pulls back a 38% retracement. So rather than the 38, there's the 38, rather than the 50 or the 61.8, this thing holds at the 38% here. So it pulls back 38% and starts to bounce. Now, on a pullback of 38%, where are we likely to see this market run to? On a 38% pullback, you can see our targets up here are in between the 23 and the 61.8% extension. Now that's your target. For someone looking to trade long here, you get a long here at the 38%, and you're looking to place your targets. Depending on how aggressive you are and what the nature of the market is, you're looking for a target up of about 23% to 61.8%. The reason you can look for a little bit bigger target with the 38% pullback versus a 50 or a 61.8 is because with this anchor leg, that's what we're talking about here, this original anchor leg, this anchor leg has definitely pushed up just the same as these other two. But the pullback is substantially smaller. Having only a 38% pullback means that the momentum of this anchor leg is still very, very much intact. It's still very much intact, and it's got a lot of strength here to the upside. So basically, the less pullback that you get, the more follow through you are likely to see. So on 38%, you can go ahead and write this down, guys. It's a very good diagram. I will send this out as well if you would like. But you're looking for the 23 to the 61.8% extension. All these are kind of A, B, C, Ds in a way. Pat, that's a great way of saying it. Pat says A, B, C, D. That's very true, meaning that the anchor leg is the same distance as the follow through. Same thing. I'm just explaining it a little bit differently. So in the same anchor leg, same distance, you have a 50% pullback. Remember the 38 was a little bit higher. You get a bigger pullback. You can look for a minimum of the previous swing highs all the way up to the 23% as a nice target. Okay? So you got a nice anchor leg to the upside, pullback of about 50%. Where can you look for your targets? you can go ahead and look to retest some previous highs or the 23% extension, depending on what type of market personality you have and actually your overall your risk tolerance. So, and then finally the 618. This is kind of the last threshold because a lot of times, if you see me, I will look to enter at the 38 to 50% pullbacks, and I will have a stop below the 61.8. If it goes down and breaks the 61.8 by a couple ticks or more, I consider this uptrend to have failed. This anchor leg to have officially failed at that point, and I will put in a stop loss and get out. But nonetheless, if it does hold the 61.8 and we get a bounce, I'm only going to look for a retest of them prior swing highs. I don't ever get too greedy on this situation because I feel that this anchor leg wasn't as strong as what this anchor leg or maybe this anchor leg would have been. So I don't get too greedy and I go ahead and take profits at the previous highs because more often than not, you find a double top and you start to get a little bit of weakness here. So does that make sense, guys? The further this pulls back on this original anchor leg, the less likely of a follow through you're getting moving forward. Does that make sense, guys? Do we have any questions about that? That's kind of a big point whenever you're looking to trade just Fibonacci's, and especially if you're looking to trade Fibonacci's off of, like a support or resistance area. And I'm going to go over all that here in just one moment. Any questions about this diagram, guys? We're going to go ahead and keep speeding on through these Fibonacci series. I'm recording this. This is for training only. That way we can get to the strategies, get to the live charts. I'm just going to pull up the live charts and start drawing, guys. And then you can go back and you can rewatch it, bud. But yes, thank you for the comment. So anyways, you guys have any questions on that, guys? On any questions at all on finding targets? I'll leave this up kind of down in the bottom corner so you guys can maybe draw this out or keep it if you would like. Simply here, this is just a slide that's actually on the website. So if you guys wanted this, you can download it straight from the website, guys. It has all kinds of good stuff on here. Basically, what are we looking for whenever we're trading, especially trading Fibonacci's? We're looking for trend. We want to find a new trend, whether that's a new trend or a continuation of a trend coming out of some sideways chop. We're looking for the trend. Which way are we looking to trade this? We're looking for a Fibonacci numbers, 38, 50, 61.8, and then support or resistance to confirm this Fibonacci level. Now, some stuff I'm going to go over, and you're going to see here in another image, I use a lot of previous support and resistance to confirm my Fibonacci levels. So let me explain. If we have, say, a push to the downside, a pullback, and then we start chopping here a little bit, but then we finally get this break to the downside. And on this break to the downside, you're always like, what Fibonacci level do I use? This is a very easy way to identify it. If you have prior support or resistance, look at the Fibonacci level that comes in, called the Fibonacci cluster for the most part. What Fibonacci number comes in closest to this resistance area? Might be the 50, might be the 38, might be the 61.8. I don't know, but that is a very defined area for you to go ahead and confirm that this anchor, this high to low anchor, so that 50% pullback comes at that resistance. That's a great place to go ahead and trust that 50%. Look for that downside opportunity. And if you look over here, what would you be looking for? Look for that minus 23% extension level for your target. Okay. A lot of situations you will have something like this where you come down, you have the same type of deal, but then all of a sudden you get broken down and it doesn't break all that much, but you have a very clear breakthrough. It's broken through on high momentum, high volume to the downside. You get a pullback, but it's only 38%. And you're like, well, I usually take 50% retracements. You're not going to get a fill most likely. I'm not going to place an order at 50%. And if you're part of my trading room, you know exactly why. I do not like to short into support. Does that make sense? So if I were to put an order up here at the 50%, that would mean that I'm putting an order up here to short into this recent support. And that's not what I'm looking to do. I do not want to short into that support. I'm looking to get in front of that resistance, and that is going to be the 38%. and that is going to show me that, hey, we got a lot more room to run here. You can go ahead and look for the minus 23% or even minus 61.8% targets. Okay, guys? Does that make sense? And then the same thing applies to the 618s. But that's what I mean by having confirmed support or resistance to help you out. Now, sometimes you can't always have that. So hopefully maybe a moving average comes into play, and we can go over that at a later time here in a little bit. But anyways, so number one, trend. Which way? We're looking to get a new break of trend. So if the market's been trending down and we start to see this and we get a break of this high, we're starting something new here. We have a chance of starting a new reversal, and then we could start looking at our Fibonacci series for a pullback and trade to the upside. So we're looking for a break, a new trend, a new reversal, and getting in the direction of the trend. Look for your Fibonacci numbers, and then ultimately support and resistance. Let's go up here and take a couple look here. What is the ideal pullback? I just drew it out. I just wanted to show you one more time. We have obviously swing highs, swing lows. We've been trading in a downward fashion. You can see the moving average is definitely pointing to the downside. So the momentum is to the downside. We're going to draw from the most recent high to the most recent low. The easiest way to identify this is draw from left to right, guys. Any of you who are brand new to Fibs, I know some of this is way basic for you, but for any of you new, you're always drawing from left to right. So if the market's actually pushing to the upside, you're drawing from the lows to the highs, left to right. And if the market's pushing down, you're drawing from the highs to the lows, left to right. So you're always drawing from left to right, bud. Okay? So basically what you see here is what I just drew. You have these previous lows, push down, retrace back up. There's your best entry, guys. Now that's either going to be a 38, a 50, or a 61.8% retracement, and that is going to give you your best entry. Push your order right before them previous swing lows. That is the absolute best ways to use Fibonacci's. And the reason we use Fibonacci rather than just saying, well, that was simply just a retrace back to resistance. No kidding, that was just a retrace back to resistance. But we're using the Fibonacci's to find out where this thing is likely to end up. Where's my target? That's why we want to measure this pullback, is so we can find what's the ratio that this thing is likely to get to. And that's why we just covered where our targets are, what the most likely extension would be for each pullback. So that's important. You're welcome, bud. You're welcome. So yes, very important, bud. Absolutely. So yeah, more than just taking a retracement. Let's go back to the other way. More than just taking a pullback to the support, which everybody knows how to do. The reason for us using Fibonacci is so we know what the pullback is. If it's 38, we're looking for 61.8% extension. If we have a 50% pullback, we're looking for like the 23%. We're not getting too greedy, and so forth. So that's the reason to use Fibonacci. So Fibonacci is not only for your entries. I use Fibonacci's probably 70% for my targets versus my entries. Exactly. And here's just a snapshot of it, guys. I talk about having the trend. We simply went from the high to the low, pulled back here to the 38 to 50% retracement. In this image, I have a snapshot of the 61.8. I talk about a stop being 2 ticks above the 61.8. And then you see the target right down here at the 23% extension. Same thing to the upside. So if you guys want, you can go ahead and download this from directiontrader.com. It's right on there, guys. You can actually download it and just put it on your own desktop. There's a lot of other stuff on here for you, bud. There's a whole nother strategy that we're not even going to go over because we just don't have time to cover it here. I'm trying to make this presentation in about 30 to 45 minutes, and I don't even know that I'm going to do that. So yeah, you're more than welcome to go on there and download it. If not, just email me. I'm happy to send it to you, man. Yeah, go ahead and email me, and I'm happy to send it to you. All right, guys, do we have any questions thus far? I'm basically going to jump into the charts now. I'm going to start to draw. I'm going to find the direction. I'm going to draw, and then I'm going to wrap this up with something very, very awesome. You guys are going to get a trading strategy that I personally have used for about 7 years, and I absolutely love it. It carried me for a long time. It got me started with Fibonacci's. So it's something that we all know about, but yet we don't actually understand it. So I'm going to go ahead and show you that it's something you can implement tomorrow if you if you kind of get what I'm saying today. So all right, let's slowly get started here. And as you notice, especially if you've seen me present before, you know this is not what my charts usually look like, but this is all you need for trading Fibonacci. Simply, let's figure out exactly. Let's just go back in time so we can start fresh. And I'm just going to start drawing here for you guys. You can clearly see, where I'm going to draw from, and this is on a 512 tick chart, Alexandra, 512 tick chart. And you can use this on absolutely any chart, guys. Absolutely any chart. This is still part of the basics, and then we're going to get into the strategy, which is what most of you are going to want. All right, moving forward here. You can see we clearly have a market pushing down. We started chopping sideways. Now, if you can just start drawing on your screen with, you can just use your indicator, a trending indicator, whatever you want to use. I got this little drawing tool that kind of helps me out, but use whatever you want. You can clearly see that we've now broken to the upside, right? Clearly see we've now broken to the upside, right? So now is when we start to draw our Fibonacci's. You draw from the low to the highs, and you find that zone. What are we looking for? We're looking for the 38 to 61.8% pullback. And depending on the pullback, will tell you where you're looking for your target. Now, I'm just going live right off charts, guys. I'm just the most recent data, and I'm just going live here. So nothing's really set up. We're just going live, and I'm just going to show you what I see. So as you see here, we got the pullback for the entry. As this thing starts to trade to the upside, what are we looking for? What are we looking for, guys? Can anybody explain? We got a 38% pullback. So we can look for a minus 23% target, or if we're looking for a little extra, the 61.8% target. Okay, a little bit bigger move. 38% pullback, 23 to 61.8% extension targets. Okay, so we'll definitely hit its targets. And as you see, as this keeps on breaking through new highs, guys, you can keep on drawing these until you fail, because they will fail eventually. So we originally got the nice anchor leg, low to high, pushed on up, hit the 23%, as you can see. We just simply redraw again. Most recent lows to highs. You see we got a pullback of about 38% to 50%. Look for the 23 to 61.8% extension for your target. And then you see, look where we went up to. We went right up here, 23%, pushed on through, found the 61.8% of there as well. This is very basic for you, I know, bud. Absolutely. You're here for the strategy. This, I'm just trying to show people how to properly draw Fibonacci's. Simply go from the most recent anchor. Now, when I draw these guys, you're probably going to ask, well, what anchor do we go from? What leg do we go from? I'm looking for the absolute most neat drawing. Now, that's a weird phrase. I'm looking for a neat anchor legs. There's no good way of saying that. Yeah, exactly, bud. But looking for something neat. I'm not looking for something that's going to chop around. I'm looking for the most recent low to the most recent high, and I'm looking for that pullback. Sometimes we'll get it, sometimes we won't. As you see here, we pulled right back into that 38%, just in time to start pushing back to the upside. Yeah, exactly. So, all right, and now you can see we're starting to roll over. So the next fib would have actually failed. I said they would fail eventually. They would eventually fail. So let's just see here. We're going to start chopping sideways, it appears. Now we're looking for a clear break of direction. Now, would you say this is a very clear break to the downside? We had this nice clean push to the upside, retested our support, and now we have officially not created a new high. And now here we go back to the downside. Here we go back to the downside, guys. Fibonacci's are simply just a tool. That is all I use them for, as a tool, bud. That's all I use them for, as a tool. Exactly. Do we have any questions on drawing Fibonacci's? We just drew these standard pullbacks, guys. You can see these are all regular anchor legs, regular pullbacks. I'm going to go to a couple extensions and show you the difference between a regular pullback and an extension level. So I see one here. Let's go ahead and look here. See, we have these regular pushing up. We're just grinding to the upside, making nice new smooth moves. And then you get this big old thrust here, guys. Something way out of the ordinary that is definitely not something that would have, is conventional of what we were trading in. So when you get these big thrusts here, rather than going from the most recent lows to the highs, because they're never going to pull back, right? We do an extension. We go from most recent highs to highs. Does that make sense? So rather than going from the low to the high, you go from the swing high, you can see the swing high, guys, to the highs, and you treat it the exact same way. 38 to 50% pullbacks, looking for that target. Here you went 38%, hit right up to the 23% to the tick. Okay, guys? Now let me try and find one more extension, and then I'm going to go ahead and start talking about today's strategy and getting you guys a good strategy to go home with. As we go home forward, you can see these are just standard moves, standard oscillating, and then bam. Everybody can see what happened today, right? Everybody can see what happened today. You see, we were just oscillating nice and smoothly, just pretty typical anchor legs. All of them are about the same, and then all of a sudden you see this big anchor leg to the downside. There's no way that we can trust this drawing from the highs to this low and expect this thing to pull all the way back here. What we have to do from here is draw from the lows to the lows. Remember, in the past we drew from the highs to the highs. Here we're going to the downside, left to right. We're drawing from these most recent lows to lows. And what did we find? We found that this thing pulled back right to our 38 to 50%. No, these are live markets, bud. This isn't anything I put up here. These are just live markets. So yes, this is just how it works. I'm just going straight off live charts. So yeah, we pulled right back to the 38%. After this anchor, 38% pullback. What are we looking for? 23% target. You see it hit right here. I don't even know what's to be expected moving forward. As you see, we move forward. We found that 23%. We found a little bit of chopping there, and then ultimately it did go to the 61.8%. As we know, that is a high likelihood target. If we bounce off the 38, we can look for that 23 to that 61.8% extension. So, yeah, you're welcome, bud. Any questions on this basic drawing? Same thing applies here to the downside. Any questions, guys, about this? This is just the absolute basics. I'm going to go back and I'm going to add another time frame on here. We're going to draw on a larger time frame, and then I'm going to show you how to minimize some risk and get into a high percentage Fibonacci trade. All right, Daniel. Absolutely. Let me reiterate there. So, Daniel, you have your typical anchor legs. You can see them. You can just go back in time and you can watch what the market's been doing, and then you can see that this is absolutely out of the norm. So you have your typical anchor legs, your market's moving along, and then you'll get something like this. The market will just run, and this is one to the upside. So rather than drawing from your conventional low to high, you need to take it from the high to high, and then you use your retracement levels off of that. So you would draw from the high to the high rather than from the low to the high. And the same thing from the other way. If you get this unusual thrust, as I like to call it, you're starting to trade nice and smoothly here. You got this nice move, and then you all of a sudden get this thing. You can't draw from this most recent high to low because you're just never going to get that fill way back here. You then draw from the most recent anchor low. It's an extension. It's just a ratio, bud. Draw from the low to the low, and then you're going to find your retracement levels and go ahead and trade it just as if you were trading normally. But the key of all this, guys, to reiterate everything that we need to learn here about fibs, it's all about the trend. It's all about finding the direction of the market, which is why I'm going to take it one step further. And this is the final step to the basics of all this, making sure you have multiple time frames when you are trading Fibonacci's, guys. You don't need to trade 5 or 6 time frames to get it all. You know, in my live trading room, I do have 4 different time frames that I use. But let's just take this for example. I am going to use 2 separate time frames. I'm using just tick charts, guys. I'm not even going to the minute bars. I'm not going any further than tick. I'm just going to go ahead and stick here. My only rule is try to have it a minimum of 2. I prefer 3 times larger. So you see here, we got a 512 tick, 512 tick chart, and over here I have a 1600 tick chart. So that is pretty much 3 times the size. I say a minimum of 2 times the size. Try to make it 3 times the size. It just gives you a little bit better edge, a little more confirmation on the direction of the market. So the reason we use multiple time frames is to find to find the bigger move in the market, the larger directional move, and that's where today's trading trading strategy comes into play. Using the multiple time frames, using the larger time frames to draw a fib, and then going over to the smaller time frame to enter. You're going to want to watch this. This is going to be the reason you're here. If you guys want to write this down, if not, it is recorded, but yet you might want to, just for your own notes, keep something like this. But let me just go ahead and start to draw here, and you guys will understand why whenever we move forward here. So moving forward here, let's go ahead and just act like we are trading a typical pullback here. We have this big old anchor to the downside here. You see this high to this low. You see we came right up to this 61.8% here, and then we held it. Now, some people are going to say, well, it breached above it. You know what? It did, but you know what? I'm not somebody that's going to bring it down because I'm not going to trade. I'm using this strategy. I'm not trading off of the 15-minute to longer time frame. I'm using this for a tool to trade the smaller time frame. Okay. Now this strategy is incredibly accurate. So basically, what we're going to do, we have an anchor leg here. We go from, you could draw from up here, and it absolutely is going to hold. But most importantly, what I'm looking to do is find a Fibonacci number that this thing holds at. And as you see, it held right here. Now, some people are, I'm going to go into this a little bit further, and you're going to see why we're going to find out which one of these held. So as we see here, it held and started to push to the downside. When we see this thing start to push to the downside, we go over to the smaller time frame and take the Fibonacci trade off of that time frame. As you see here, just simply look at my cursors. This high here is the same as this high here. Now, I'm doing this Globex throughout the Globex session, guys, meaning that some of these trades that I'm going to show right here are taking place after hours, before hours. I can assure you, if you trade this just during the trading hours, your percentages go up substantially. But you're going to see right here that you don't need that because the percentages are there anyways. The rules to this is basically when you find the anchor from the larger time frame, so use a larger time frame. I don't care if you use a 15-minute and then take the trade on the 5-minute, that's fine. But I'm using a 1600 tick chart. Take from the high to the low. Find where this thing starts to drop from. Go over to your smaller time frame and draw it. Take the Fibonacci trade off of there. We're going to use a 6-tick stop with this based on a 512 tick chart. I'm going to use a 6-tick stop every single time. Okay, guys? There's just a couple rules, and that's it. Just a couple rules, yes. So we're using a 6-tick stop. We're going to enter in between the 23 and the 50% pullback, probably around the a tick or two in front of the 50% pullback. I'm going to explain all that here in a minute. And then as it approaches its most recent lows. So what I mean by that is we're going to have a push down. We're going to enter. We have the 50% retracement. We're going to enter 1 to 2 ticks in front of the 50% retracement, depending on the anchor leg and how far this thing pulled back. And then we're going to put a stop 6 ticks up here. And if it comes down and retest within a tick or two of this most recent low, we're going to drag that 6 ticks down to our entry, and we're waiting for the minus 23% target. That is it, guys. I'm not a big fan. If you've ever seen me trade live, I'm not a big fan of kind of set it and forget it type of strategies. But this is one of them, and this is a very, very high percentage strategy. So basically, what we're doing is we're drawing on the larger time frame. You can even take it from the high. Yes, I see your comment, bud. If you want to take it from the most recent high, the absolute high to the lows, even better. We found where the anchor was. We found the highs. So then what we're going to do is we're going to draw from the most recent high to the most recent low. And we're going to enter a tick in front of this low. As you see here, we got the 51 halves. Enter here at the 51 quarter. Enter here at the 51 halves. Looky here, we got a pop up. We got up here. We took a stop. 6 ticks, we take a stop. Not a good way to start this, is it? No, I seen your comment, bud. But anyways, so we took a 6 tick stop on this, right, guys? We took a 6 tick stop on this position, but it did roll over. So you kind of got the impression of what we're looking for here. Let me go ahead and move on. You can keep track of these, guys. This one here actually took a 6 tick stop, and then it moved on. But let's move on here with the 15-minute. And you can see we got a very clear change in momentum. You can look at the moving averages. You can look at the prices. We got a change in momentum, right? We got a change in momentum. I'm just going to go all the way through the last 5 days. I don't know what the results are. I just know they're probably positive based on my history. All right. As we have this pullback here, you see it pulled back to the 38% pullback here, guys. So we go over to the smaller time frame. We find that most recent low. As you see, this low and that low are the exact same. Sorry, why not enter at the 6 room? Because you won't get filled most of the time, bud. You won't get filled most of the time. Let me answer that at the end, bud. I think you're talking about why not enter at the 61.8% back here, because you don't know that it's stopping. The reason for us using this is we're finding somewhere, using low to high, the Fibonacci's, we're finding somewhere where it stops. As you see, we can see it stop here and actually start to push to the upside. Broke the most recent high, and the trade is coming on the smaller time frame. We're just trying to find support on the larger time frame. So we go over to the smaller time frame and we take the trade here. Basically draw from the lows to the most recent highs. Seeing this pulled back about 38%, so we're going to take the pullback closer to the 38%. On the first one, we would take the pullback closer to the 50 and 61.8%. I'm not trading on the slower time frame, bud. I'm using the slower time frame to find the support and resistance, and then using the faster time frame for my entries and exits. So basically, we found a low here where we found this thing to push higher. We got our anchor leg higher. We're taking our pullback here. As you see, we pulled right back here to the 57. We got a nice entry right up to the 23% extension for a winner. Very nice, profitable trade. And mind you, the winners are going to be much greater than the losers. The winners will be larger than the losers. All right, let's keep on moving forward. As we push on forward, we got another one. This most recent low to most recent high. You can see we clearly got a pullback of 50%. So that's what we're going to pull back here on the smaller time frame. See this most recent low here is the exact same as this low. So what are we looking for? Low to high. 50% pullback would be around the 62 level. This thing pulled all the way back to about the 61 half. So we took just a couple ticks of heat right on up to the 23% target. Another great profitable winning trade for over 2 points. So now we're 2 for 1 with the winners being much larger than the losers. Simply just taking the the smaller, less risky. The reason I say less risky, because if you were to draw this again, and we're looking to enter here at the 38 to 50% level, we're looking to enter somewhere around the, what, the 60. Let's just be conservative here with the 61. Your stop's got to go down here around the 58s. That's 3 points you got to risk. Okay? That's 12 ticks versus 6 ticks. You're risking half, and on top of that, you are finding where we found support, right? We're already waiting. We're already getting the bounce. So we've got confirmation that, hey, there's buyers already trusting this pullback. So now as we keep pushing higher, look at here. We got another low to high. We got a pullback here. Let's go ahead and move on forward. Move on forward. All right, here we are. Here's the exact same low. You see the exact same low. What are we going to do? We pulled back to the 50%, so we're going to measure from, or the 38 to 50%. So we're going to take the order here from low to high. We got to pull back to 38%. There's a good chance we will not get filled on this, so I'm not even going to count this in our examples. But you see here, we would have had an order out right here. We would have been looking for a target of the 23%, which it hit exactly before rolling over. So we're not even going to count this. We're going to count this as a no fill. Okay, so we're still 2 for 1, and our winners are over double the losers. So very good. So now let's go ahead and keep moving forward, guys. I'm just going to keep showing examples here, guys. We got a big anchor to the downside here. Let's go ahead and take from the highs to the lows. We got a clear drop to the downside here, guys, right? You guys can see that. A clear drop to the downside. I'm willing to go ahead and check out your questions, guys. If you have any questions, go ahead. Now, I do have something here that I'm going to go ahead and hit touch on here. We have a nice, obvious high to low pullback. Now, you can say, well, it pulled back here and here. We're going to test them both. We're going to test them both, guys, because they both found bounces. So looky here. Take the first one. We take the first one, which is right here. Take from the highs to this most recent low. Take a pullback. Enter just in front of the 50. Where's our target? 23% extension. 23% extension. Sorry about that, guys. Another winner. And what's even more impressive, let's move on forward to the next one. Now, this is this easy, guys. Yes, it's this easy. Yes. The next one, you can see we held at the 50% and we got an anchor down. What do? High to low. We enter at the 50, just in front of the 50% pullback. Target being the 23% extension. Yes, it's that easy, bud. We are 4 for 1, having our profits double the size of our loser. As we keep on pushing down here, see an obvious high to low. You have to think of this as if this right side didn't exist. So you see that the bigger swing failed, right? But we're not taking the trade on the big swing. You're going to see the bigger swing pull back. We have shorts here, but you see it's ultimately going to fail, but we don't care because we're taking the trade on the smaller time frame. So let me go ahead and go over here and retest this one. I'm just doing the last 5 days. That way you guys got plenty of data here to go off of when you rewatch this, because this is that important, guys. I think you can truly grab value right out of the gate here. As you see, we have not made any type of thrust to the downside. We're still making highs here, guys. So let's push on up. Push on up. We found the 50% retracement. Let's see if we got a drop. Sure enough, we did get a drop. High to low. What are we doing? We're taking the pullback of the 50%. Pretty simple, right, guys? Pretty simple, right? Lows, looking for our target at the 23%. You can look for more, but the rules is just the 23%. Like I said, I'm a very conservative trader. 23%. There were 5 for 1, guys. And our first one was a stop out. That kind of got us off on the wrong foot. But everything is based on the larger time frame, yes. As we move forward, we see this. We got an obvious low to high, right, guys? You guys can see this big old leg here, right? got a low to high. Let's go and get the pullback and see where we're at. We got the push up. We're pulling back. We're pulling back. Okay, we're pulling back. Here it is. We found the anchor. We got it thrust to the upside. So we go from the low to the high. We got a pullback. We're looking to enter here at about the third 53.50. This thing pulled all the way back to the 52.75. So 52.75, we still are in this position. We're sure enough, we're still in that position. I'm looking to take profits right there at the minus 23% extension. Any questions about this, guys? Any questions about this? This is something I only use on the S&Ps, guys, because the S&Ps have so much volume. You have a lot of backfill, and what I mean by that, the S&Ps benefits are also their drawbacks, meaning that there's a lot of backfill on the S&Ps. You see a lot of this on the Russell. You may see a lot more chopping, big moves. The crude would be the same as this one. But the S&P, you get a lot of backfill, so it allows us to go ahead and do this. So as you see, this thing went ahead and popped on to the upside. Now let's just keep on going forward here, guys. I have no idea what to expect. Let's just say from this low to the high here, we got a nice pullback here. Let's just go and take a look here. We're about done, guys, and I want to go over as many questions as you guys have because I'm getting a lot of feedback on this right here. So, okay. All right, so we pulled on back to the 38% and we got a leg to the upside. We pulled back to the 38%, we got a leg to the upside. What do? We go from the low to the high, low to the high, pull back, target. Another winner. Nope, this is just me just grabbing charts, bud. This is me just grabbing charts. So do we have any questions here, guys? What kind of questions do we have? One more. Okay, let's do one to the downside. You see this, definitely this most recent high. Draw to the anchor low. You can see it pulled right back here. Let's go over to the smaller time frame. Nope, I don't have an idea what this result will be, but I'm going to go ahead and guess that it's good. Let's see here what this pullback is. All right. We got a pullback here. As you see, we pull on back. This high here is the same as this high here. As you see, we came on, we pulled on back, we broke the resistance. Let's go ahead and draw our Fibonacci, guys. From the high to the low. We short here. This is a 50% pullback. Let's short at the 50. Profits at the 23%. A 1 minute chart. Let me go ahead and pull up a 1 minute chart. Oops, sorry about that. We're looking for 1 minute, not 1 hour. 1 minute. Yeah, right. You're welcome, bud. Okay, let's look at this most recent anchor leg down. As you see, let's go ahead and zoom in. As you see here, the same thing from the highs to these lows. 50% pullback, 23% target. Okay, same type of deal. Let's go on back in time to the last one that we did. I'm not sure where it was. But anywho, yeah, it appears it works just fine. Like I said, I use it on the tick charts. Right here's the last example. We found this low here. We found this low. This was, remember, this was an anchor from low to high pullback that actually failed. But nonetheless, we're using a smaller time frame, and ours, low to high, was a winner for target. So what do you guys think? Anybody think they can use this tomorrow? In real time, I don't have anything right now, bud. But yeah, this I just pulled up a 1 minute chart. I hope that helped out a little bit at least. But do you guys have any questions about this strategy today? I'm getting a lot of really good feedback, guys. I want to thank you for all that. I know today we started off really basic with the basics of the Fibonacci's, but I feel that that's where we got to start. because we wouldn't have known all this other stuff if we wouldn't have known our targets and our proper pullbacks to begin with. That's where it all starts. Um, that's where it all starts, guys. And people don't get taught as much as about the targets as they do the pullbacks. As you can see, I don't use a lot of, in my trading room. If you've ever seen me live, I don't use a lot of Fibonacci's for my entries. What I'll use Fibonacci for is if I have a support and it breaks down, I want to see what Fibonacci number comes in line with this most recent resistance here, and say it's a 50. And the reason I use that is so I can explain why I'm looking for what target. So I'm using Fibonacci's a lot more for the targets than I am the actual entries, per se. So that may be just a little bit different spin for anybody who's new to Fibonacci's and new to trading them, and maybe that can help out. Are there any questions here further on, guys? I know you've been asking a lot of questions, and a lot of my content has been kind of skewed towards some of your questions, so which is completely cool. I'm fine with that because it makes these little presentations go a little bit easier. As you can see, I'm not someone who's going to put together a slideshow and give you this presentation and write all this stuff out. I'm going to show you live in real time, guys. I want to show you right in the real markets. I didn't know what to expect when I started drawing this. I just know the rules of strategy. And to be honest, I wish we would have had one that would have been a break even. Let me explain that. Let's say we had this big thrust on this 1600 tick chart, and we got this. Let's just say a 50% pullback, and we got this anchor up. So then we go over to the smaller time frame, and then as we got this pullback, this thing started to do this, right? And let's say that we got long right here, and it trades on up. So we had a 6 tick stop, and then this thing decided to go whoop, straight out of bed. So what would happen here? We come up and retest these highs. That's when our stop goes from here up to our entry price. And as it chanks, we just got a free trade. We didn't have any in today's examples because they all went to final targets except for the very first one. So, I wanted to kind of explain this. So basically what happens here, if we get long here, we have a 6 tick stop, a target at 23%. As we retest these highs, get within 1 tick of retesting highs, we drag this stop up to our entry, so we're not risking anything because we've already worked really hard to get this thing to leg up, and then it just falls out of bed. Okay? And then it just falls out of bed. Okay? So then we have none and none out. But nonetheless, guys, the one trade that we did have a stop out for this example went on to final targets because it stopped us out to the exact tick. So I think this was actually a pretty good example, pretty good 5 days. I think we had 6, 7, 8 trades there that we showed, and all of them end up turning out pretty well. I think you guys kind of get where I'm coming from on all these and all these levels. If you guys have any questions at all about today's presentation, anything else you would like me to show you that's somewhat Fibonacci related, if not, if there's none of them, then I'm happy to answer any other questions you may have. I will be doing these webinars. Good question, guy. Good question. Thank you for asking. I will be doing these webinars twice a month, but it's going to be part of a package that I throw together, man. I am throwing together a new package that's going to offer a whole bunch of really high percentage and quality education, and it's going to put you in my detailed newsletter. So my trading room is a little bit more. If you want to see me trade live in real time, it's $197. I do trade live as it gets. But if you just want to be part of these evening webinars, it's $47. I'm just starting this package, guys. You're welcome. You're welcome. And yeah, it's on the website. Go ahead, bud. But what you're getting with this $47 is basically you're going to get this page. Now, this page is password protected. With the $47, you are going to go ahead and get a username and password. But all this stuff is videos that I've made helping you get along the way. Pre-market analysis, how to set yourself up, getting ready for this morning. The different personalities in the markets. This is all types of stuff, all the way down to live trades that I've taken. And sure enough, in this trade, you're seeing me use Fibonacci's. But this is going to be this is very basic, by the way, guys. This is going to get updated and put into categories, and all these webinars are getting posted on this page. So if you want the archives of these webinars, they're going to be on this page. and all that is going to be, rather than spending for the full membership. You're welcome, bud. I appreciate you wanting to be part of our group. So yes, for the $47 that you're going to see right here, that's what this is. This $47 is active. It's you don't have to get the full 197 membership. The 197 you get a $7 trial, but that is the live trading room. That's where we trade live in real time every day. I trade on my dome right in front of you. But if you don't have the time to be in front of the markets with us every morning and you want to just come to our webinars, I'm going to be doing these twice a month. You're going to get the archive of all these webinars, and you're going to get my daily videos, and you're going to get the archives, which I'm always adding to every single week. So that page that you've seen that's password protected, it's going to get updated, guys. I'm going to put more categories on there. It's going to be a lot more professional come the end of this week. Mind you, this is the kickoff of this little series. Um, you're going to get access to it, and I'm putting brand new stuff on there every week. And you trading members, you will have part of that too. So, um, and also you will have my personal contact information to reach out to me day in and day out. So I love working with traders. Any of you that are part of my members, you guys all know how much I reach out to you, especially if you reach out to me on Skype and so forth. So not really meant to be a sales pitch today. I just wanted to give you guys this webinar. But thank you for asking, Bud. It made me go ahead and present this. But yeah, so under plan, plans and pricing, you can go ahead and go here. $47. Click on that. It's that's all it is. Price will never go up, and you're going to get a ton of education for that. Everything you possibly need. You're just not going to get access to the live trading room. That's pretty much going to be the only thing you don't get. Let's see here, Daniel. Are the odds better on a 23 pullback hitting? Um, probably, yeah. Dan. Any other questions here, guys? I appreciate it, bud. Yeah, you can go ahead and go there. Thank you. I appreciate it. Everything else, that slide here, bud, I'm going to show you. It's under trading education. You can just go right here to trading education, and if you click there, it'll actually pop up the other trading. This is the free education. So if you guys want to scroll down here, look at all this free stuff on here, guys. This is a ton of education. Come in here and check it out, guys. Tons of videos and just information you guys can just soak up. If you like this, imagine what the detailed stuff has. So it's really an upgrade, and you can go right here and you can download this if you'd like. It's the exact slides that you just saw. You only saw a couple of them, but you can go ahead and download this if you'd like. But any other questions, guys? I'm getting a lot of good feedback. I appreciate the nice words, guys. You got a really good group in here today. So for you guys that live on the East Coast, thanks for coming out and spending time with us. I know it's getting late there, and we got to get up early and trade the markets in the morning. But anywho. Any other questions here, guys? I'm willing to stick around if you got any questions. Thanks for the nice comments, guys. I really appreciate that. You're welcome. I hope you're able to use that strategy come tomorrow. Go ahead and feel free. Go ahead and email me if you have any questions about it. You can go ahead and take snapshots of the screen and go ahead and email that to me. I will be glad to give you my feedback. I would be glad to give you my feedback. So. Yep, you're welcome. You're welcome, guys. Thank you very much, guys. You guys have a good night as well. We're going to go ahead and work on this in the room. As I said earlier in the presentation, for you members of my live trading room, we've kind of been missing out on this because we've been so concentrating on momentum and these sideways, choppy, sloppy markets. So whenever things start to break and we start to get better moves, we will implement this. We will implement this, and it will be part of the room. It just these last couple of weeks. If you've only been with me a couple of weeks, you probably haven't seen it. If you've been with me longer than a month or so, I've absolutely used this on a regular basis. So, yep. Anywho, so any final questions here, guys? I want to thank you guys for coming out. We've gone just over an hour here, so we've been able to keep it within my time restraint. I've never been able to do that with webinars. I always go way over. like when I present for Infinity and other people, that somehow I just keep on going. So we've been able to pack in some information and plenty of stuff in here within an hour. So I want to thank you guys for the nice words. All right. Yep. See all you guys in the morning too, you members. See you in the morning. Everybody else, thanks for coming. And like I said, if you guys like this, I'm going to be presenting new stuff like this every month, a couple times a month. So that $47 is not a ton out of your pocket, and you're going to get me. You're going to get my contact information. You're going to get that access to that trading education page. We got a forum in the members area. We're getting ready to have a chat community in the members area, so you're getting access to all that for only $47. Only thing you're not getting is a live training room, and I know that's a huge value. So if you're looking to be a real professional trader, especially day trader, I do encourage you to do that because I know a lot of people are really making huge leaps and bounds in there. So, your decision, guys. I appreciate you guys coming here. Thanks for the nice words. And like I said, we'll be doing this here in 2 weeks from now, and we'll be doing this every 2 weeks. So thank you guys, and thanks for all the feedback. And I will see you members in the trading room in the morning, and I'll see some of you in 2 weeks. Good night, guys.